Great news on the inflation front that many are going to miss. All right, so we're going to go out to the BLS from yesterday, CPI index summary, and you're going to see it came in pretty hot at 0.4%. All right, so that's a pretty significant inflation number. 4.4 times 12, because we adjusted for an annual basis, that's a 4.8% inflation. Significantly higher than what we would expect. Interestingly enough, the markets took off like a bat out of hell, which is, why would the markets go crazy? And the bond markets also went up too. So we look at the 10-year Treasury. Let's check this out. See the 10-year Treasury, the yields just dropped. Oops. After the inflation numbers are talked about. Look at that. That's a pretty significant drop, which means the prices are going higher. So people are buying the 10-year treasuries. That's 10-year. We want to look at the 30-year treasury. Check this out. You're going to see the same thing. 30-year treasury, exact same thing. We're talking a decline of freaking 20 basis points in a day. That's pretty significant, man. So why would that be if inflation numbers are so high? Well, because there's great news when it comes to this. So I want to just show you real quick. So you can see food at home is up to 1.8% over the 12 months, 1.8. Food away from home is 3.6. All right, so energy is down. That's good. Fuel oil is way down. That's good. Electricity is up, but not huge amounts. Let's see right here. We're going to go down to shelter. Shelter's up 4.6% annualized. Transportation services up 7.3. What are the two biggest components of CPI? Want to take a guess? Have you not read my book right here? Relax and Retire. All right. Shelter is by far and away the biggest component of CPI. Nothing even comes close. Transportation, I think number 2. Let me just double check. Yeah, transportation is number 2, but everything is shelter. Shelter is significantly the biggest component of CPI. Shelter. Shelter is a lagging indicator. All right, and I want to show you something here. We're going to go first of all to rents.com. Check this out. December 2024 rent report. Rents fall to lowest level in nearly 3 years, amigos. Lowest level in nearly 3 years. The median asking rent fell 0.3% a year in December of 2024 to $15.94 a month. It also fell down in November as well. The median U.S. asking rent fell 0.7% a year from December over 2024, their lowest level since March of 2022. On average, rent returns to common waters in 2024, a welcome respite for renters. You can see right here. This is the pandemic. The rents jumped like crazy. Now they're going down. So they went from $1,700 to $1,600. So they've dropped. The rents have dropped. Very interesting, is it not? Yes, it is. Now let's go to something else here too. Median sales price of houses sold in the United States. The median sales price in October 2022, right there, was $442. Now it's $414. So the actual sales price, what it transferred at. The median sales price has dropped. The rent has dropped. All right, so the median sales price of homes has gone down from right there to right there. That's not an increase. That's a down. Now, still high, but it's a down from where it was before. Rents, still high, but they're down from where they were before. And you can see right here, the lowest is 2022. That's not an increase. That's a decline. What, again, is the biggest component of inflation? Is shelter. Shelter is the biggest component of inflation by far. Nothing comes close. Check this out. It's my man, Michael Leibowitz, over at, what's it called? What is this? Real Investment News or something like that. What's the what the hell is this thing called here? Real Investment, RIA Advisors. Real Investment Advice. So check this out. I want to show you something here. The inflation surge in 2022 and the lasting effect was almost entirely due to broken supply chains and limited good inventories. So, yep, 100%. You limit supply, you increase the demand because you have coupled with strong demand due to massive government stimulus. So we're going to limit the supply with broken supply chains, telling people they can't go to work, and then we're going to increase the demand by giving people money. That's inflationary without question. An increase in demand coupled with a decrease in supply is inflationary. No one should be shocked by that. That condition has been normalized and is unlikely to resurface. In fact, I was just reading an article the other day about the state of Maine. They have massive deficits now because they burned through all their COVID money on stupid stuff. Now they're like, so stupid Janet Mills is going to propose a 70-cent tax on prescription drugs. That's tax here, tax there, tax everywhere, because they don't have the money anymore because the COVID money is all gone. They burnt it on stupid DEI stuff and friggin' 57 flavors and Silent P stuff. It's crazy. Anyway, those monies are gone. So now we're going back to a more, let's put it this way, a less spendthrift society for sure, because the COVID money's gone. Inflation's recent stickiness is primarily due to shelter cost. Within the CPI, shelter costs account for over 1/3 of the index. Unfortunately, the CPI shelter prices often significantly lag real-time indicators. As I just showed you, we have a significant decline in prices for median sales prices of homes and a significant decline in rents as well. That's not being reflected in the CPI yet. Unfortunately, CPI, as rents are slow to reset in the CPI, and housing prices used to impute rent also lag. So we got the owner's equivalent rent, which is stupid, but anyway, that's what it is. As I share below, the CPI excluding shelter costs is well within the 2018 to 19 range. When the CPI shelter catches down to near zero actual rental inflation, which it is right now, we suspect CPI will return to its 2% budget, 2% target of the Fed. Right here, credit CPI less shelter, 2% range right there. That's where we are now. You add shelter to it though, as we go back to the BLS number right there, that changes everything. Right. Shelter and transportation, the two biggest components of the last 12 months inflation, by far. Shelter and transportation, nothing comes close. Well, I guess right there, utility pipe gas, but that's small. Right there, shelter and transportation. The two biggest components of CPI had the two biggest impacts of the two highest CPI over the last 12 months. And yet those, I don't know about transportation, but shelter is going down relative to pricing. It is relative to increasing. In fact, even interesting here on this rents.com thing. Right here. Affordability has improved across the board thanks to a surge of new apartments hitting the market. A 50-year high in new apartments. And rising wages. More apartments means more supply, which helps offset demand and keeps rent prices from surging. As a result, vacancy rates are at their 3-year high. Plus, fewer renters are moving than ever, meaning you face less competition. Anyway, so there's your daily dose of positivity from your old buddy Josh and Pablo and Finnegan. So, look, man, I think at the end of the day, inflation will probably be and look, I could be wrong. Who knows? No one. That's this thing. No one knows. But given that the CPI is based heavily on shelter and the shelter prices are going down. In fact, I see on my own house, I get this thing on Zillow from my mortgage company. The price of your home is declined X amount of dollars. So I say, okay, I don't care because I'm not selling anytime soon. But still, you see it. If you look on Zillow, you're seeing the prices. There are a lot more price declines than there were before. So anecdotal wisdom, empirical evidence. Don't sell all your bonds yet. Inflation is not rearing its ugly head anytime soon. I mean, it could be, but at the end of the day, I think you're going to be just fine. All right, love your thoughts. Don't forget to paw that like button. Do it for Pablo. Do it for Pablo. We'll see you guys. God bless.